Let's turn to Rick Santelli now for the bond market reaction to the jobs report, which is good news for anyone trying to buy a house right now, Rick. And what do traders think about the odds of a cut?
You know, it may be good news. It's still maybe too early to tell. Let's start with the Fed, okay? Here's a two-day chart of Fed fund futures for January next month. And we don't need to get into percentages or numbers or anything. All I want you to look at is that it rallied. It rallied strong right when the data came out. When Fed fund futures rally, it means less Fed. So all I'm trying to demonstrate with that chart, we haven't changed. We're still 70+% for a cut at the December meeting. January is nowhere near. It's probably hovering around 25%, and it's at the end of the month. What this tells us is that on a snap view from the market and all its participants, the minute that report hit, it was that it wasn't a hot report, and it's not going to make the Fed proceed in probably any different way. But when it does rally, that is a sign of easing. So that is something you want to pay attention to. Now, if we consider what the big numbers in the report were, as you were just discussing with your guest, average hourly earnings, well, yeah, they were solid. Fours were wild. 0.4 on the monthly view, 4% on the year-over-year view. These are good numbers. And if you look at the rate, yes, it ticked up, and that is something to pay attention to because there's very little doubt as you look at that chart of the unemployment rate that it has slowly turned. It's now just a question of the intensity and the speed of the increase. Finally, the big story here is how differently 2s and 10s reacted to this number. If you look at the 2-year, the 2-year was a very aggressive drop, and it has stayed down. As it sits now, it's down 7 basis points on the week, which means probably not much has changed with regard to the Fed based on this report. Not more aggressive, not less aggressive, pretty much as it was before the report. But if you look at the 10-year, which is basically unchanged on the week, what we garner from that is at 10 o'clock Eastern, expectations from the University of Michigan, they were big drops, sequentially much less than expected, and the 1-year inflation rate embedded in that survey popped. And I think that that's why it's different, and it's probably giving us an early sign of what the Fed should pay closest attention to in 2025. The unemployment rate and strong wages pushing up inflation. And I think the reason the expectations was weak is because we know so little about what the administration really will do versus what they have said they may do. Tyler, Kelly, back to you.
Rick, did you see the political breakdown in the sentiment survey, Republicans versus Democrats?
I didn't.
Now this is, a grain of salt. It looks like, remember for a long, long time, the sentiment in the University of Michigan had lagged because Republican sentiment in particular was very, very weak. And then we saw a crisscross with inflation expectations where post-election, actually, they improved for Republicans and worsened for Democrats. So it goes to show your point of view as for what you're saying about the uncertainty on what's going to happen next year seems to depend in large part on the philosophy that you hold.
Yeah, the issue with all of that is that everything has gotten so political. In the discussion that you just had on immigration, I was pulling my eyelashes out. I want somebody to give me an accurate number of how many people have come across the border the last 4 years. And nobody could give an accurate number of that. So all the rest of that discussion without that number is really sort of meaningless.
But we know it's a lot, right? So we know if it lessens that it's going to, we can kind of estimate the impact.
We know it's a lot, and how much did that a lot cost versus how much did the jobs that were actually taken by some of those do for the economy. In other words, try to weigh the good outcomes versus the expensive outcomes. But without knowing that number, you really can't weigh that. So to make a statement that if he impacts immigration and slows it down, it's going to be bad for the economy, I think that is way over the skis on the actual information we know. And I think that goes to the point of all these politics being imprinted on things like surveys to begin with.
Rick, as always, thank you. Rick Santelli.